Hello, welcome to episode 3 of Too Legal Didn't Read, the podcast from me, Aurelia and Chris from Tacit Legal. In this podcast, we help you navigate all the hot issues in legal and legal tech from our perspective as co-founders of an AI native law firm, as lawyers and as product developers. In true TLDR style, we've recorded this intro at the end of our pod so we can give you the hot takes. Chris, what was our episode all about today?
So I think we were talking about VCs suddenly being interested in AI native legal services, and that being a nice indicator that we're on the right track. Not sure it's the right funding model for legal services, but our minds may be changed. But I think we don't think AI native legal services necessarily have to be the death of the traditional firm, and then we don't think there will be. It will be. There's definitely room for both in the industry.
Fantastic. Let's start the episode. So it's August, a time when we should all be relaxing on a beach, but the pace of things have been unrelenting, and a month usually a bit quieter for our traditional side of the business, but it's been manic. And aside from GPT-5, which nobody needs to hear more about, we have actually seen a lot of venture capital interest in AI first legal services, and it's picking up quicker and quicker. And the rationale for this interest from VC firms in AI native law firms has sparked a lot of conversations for us in and around the office, and whether that interest is well founded. Chris, do you want to give us some context around where this interest is coming from and why you think it matters?
Yeah, sure. So I think it's worth saying right at the top, we're not experts at all in the VC world. We never thought we'd be in an area, as a professional service that VC would be interested in. So honestly, it's all taken us a bit by surprise. We're not experts. But yeah, because if you know, historically VCs have been really only interested in the tech side of things, the scalable bit, the thing that you can scale. And one thing I do know about VC is traditionally they've discounted professional services revenue pretty much to zero in kind of traditional SaaS models. So it's kind of wild that they're now interested in AI first professional services, and it's not just legal either. I think it all kind of started from there was a Y Combinator, one of the kind of biggest incubators in Silicon Valley, or if not the biggest, kind of put out this quarterly, I think, request for startups where they say, right, for our summer cohort, whatever, these are the types of startups we want to see. And they put out this call for full stack AI companies, they called it. And they used law firms as an example. Basically, the premise being like everyone's trying to sell to professional services firms, but they're not that receptive to it. So if you can't sell to them, why don't you just make them extinct? And I think they literally used the line, instead of selling to dinosaurs, you could just make them extinct. And I think that's kind of what sparked it all. I'm sure there was a lot of murmurs in the background before that, but that seems to be the first thing. And then I think this month, I think it was last week, one of the partners at Venrock put out an article on Substack called "Death of the Billable Hour: Legal's 900 billion AI repricing," which I'm pretty sure everyone will have seen on LinkedIn because it kind of did the rounds. But yeah, so I think there's all of these very public signals coming out, and yeah, I think it's interesting, and I think it's interesting not because VC is interested, but what that says about the opportunity and what it says about where the industry's headed.
And Venrock, huge VC US firm then, and have they been in the space, the AI space, legal services space before, or?
No, I don't know. I don't know an awful lot about them, to be honest. I think obviously they're in the AI space. Everyone's in the AI space now. It's kind of the new SaaS. I don't think they're definitely not. I don't think they're behind any of the big ones that you would have seen, like Crosby. But yeah,
Right.
so I think they're very interested, but not, it's probably still early days for them, I think.
So that's really interesting then, that all of a sudden these investors, VC firms, are taking a real interest in professional services and legal in particular. So this article that one of the partners at Venrock put out, it basically, the premise being that law firms are just completely tied to the billable hour, and AI kills the billable hour, therefore traditional law firms are dead. Is that was the premise? And I mean, it's a
Yeah,
big statement. It's how do you feel about that?
yeah. So I think you and Maeve basically had the joy of listening to my live reactions as I was reading it in the office. Um, yeah, I honestly, when I first started reading the article, I was a bit like, oh God, here we go. I'm not going to enjoy this. This is
Yeah,
Um, but actually, I got to the end. The article's great. I don't agree with it all, and I expect we can. But I do think we can probably hang a lot of our conversation today on it because it covers a lot of ground. Some of it I agree with, some of it I don't. But yeah, I think. Oh, and anecdotally, I think that introduction gets off to a really false assumption. Doesn't mean the conclusion's wrong, but I just think that assumption is quite wrong to begin with. So like we've come from a background where we've seen fixed fees and alternative fee arrangements everywhere. Like they are
yeah,
not new. Um, and I think a lot of the premise of the start of the article is that, law firms can't do fixed fees and therefore they're dead. Um, but I don't think that's true. I think that's a barrier that's very overcomable. Overcomable. I'm not sure that's a word. But the areas most resistant to non-time based pricing, like fixed fees, are the areas where things are the most unpredictable, and often, but not always, it's pretty difficult to automate.
yeah.
So I just think that's not a great start. But I do think all that said, I think it's worth acknowledging cultural differences between the US and the UK. Because again, like anecdotally, I've heard that the US is much less fixed fee.
Is that right? Yeah.
Yeah, apparently there's it's far less common there. But yeah, I mean, you don't have to go very far in a UK law firm to find someone doing, a conditional fee agreements, contingent fees, caps and collars, fixed fees. Like they're things that most people know about and are using where it's appropriate. So yeah, I think there are challenges to big law firms pivoting with AI, but I don't think fixed fees and the hourly rate alone are the thing that's going to stop them pivoting.
Quite interesting though, that cultural difference in the legal markets in the US and here, a bit of regulatory side of it as well. That is it right? There's only a couple of states where you can have alternative legal service providers in the US, and yeah,
Yeah, so I think it's mainly about ownership. So, in the UK, we've had ABSs, alternative business structures, since I think 2011 maybe, which allows non-lawyers to own law firms or have an ownership stake
right.
in law firms. Yeah, that is really uncommon in the US. I think that, yeah, like you said, I think there's only a handful of states that actually allow that, which is obviously then a bit of a barrier to external investment. I mean, there are ways around it. Um, but it does, yeah, it's kind of like a early early hurdle that any investor in legal kind of has to cross in the US.
If these US VC firms are seeing the UK and maybe Australia as well as almost these kind of test beds for what's possible in legal services, that's quite an interesting space, isn't it?
Yeah, and you know what? It's quite rare for the UK or anywhere in Europe to look less regulated than the US. I think usually the narrative is in the US, they're like, oh God, they're so regulated in Europe. We've got a free market, so much better. But yeah, weirdly, it's one area where the US is actually far more regulated than we are.
I think it's very cool. It's very cool. It feels like a great place to be in the UK at the moment. So, what barriers to law firms pivoting do you agree with then? from that article?
Honestly, most of them, to a degree. Like I don't think they're absolute barriers. I think they're challenges. I'll just go through. I've got the article open here, so I'll just go through them. So he talks about revenue recognition shock, fixed price collapsing revenue per matter unless volume spikes. I don't think fixed pricing does not mean less, and actually fixed pricing done well for the right reasons is often more, not less. So, and that kind of assumes that everything's going to happen tomorrow, and it's just not. So like law firms have plenty of time to start moving to fixed fees. Those fixed fees do not have to be less initially, and they probably can't be or shouldn't be less, because then most law firms are not seeing a direct like efficiency improvement yet.
So a premium should be built in for certainty.
Yeah,
with fixed fee. Yeah,
and absolutely. And we've historically done a thing, not on every matter, because we get clients' preferences eventually, but we've always kind of done a thing where we'll offer them a fixed fee or an hourly rate estimate, and we'll be very transparent that the fixed fee is more than the estimate because we're taking on some risk. And 9 times out of 10 clients will take it for the certainty. So yeah, I don't think fixed fees means cheap. So yeah, there's an on-ramp where law firms can start using fixed fees more now, which doesn't necessarily mean revenue recognition shock, and they can kind of taper it down over time if they need to. Yeah, so then he goes into partner compensation politics. Completely agree that that's tricky. Again, switching to flat fees or fixed fees doesn't necessarily mean less compensation or less profit. So there's time on that one. Utilization metrics become useless. Kill hours and kill every KPI dashboard, comp plan and review. That's kind of true. There's this culture of hours and whatnot. But again, fixed fee doesn't mean you don't record hours anymore. If people want to keep that, and I'd say I don't agree with it. I think culturally the targets around hours is awful. But if people want to keep that, they can keep that and have fixed fees. They're just, it's two different things. Using hours as a commercial metric, a pricing mechanism, and versus a compensation metric, two very different things. So you can still do both. Efficiency gains flow to the client, not the firm. I don't think I agree with that one either, to be honest, actually, because on fixed fees, actually, if assuming your fixed fee stays the same, you make an efficiency gain, you keep the margin. So I'm not sure about that. Although actually, no, you know what? He's probably talking about efficiency gains flows to the client with the hourly rate. But yeah, so I'm not sure about that one. I think that one's a bit ambiguous. Cultural resistance, billable is part of the professional identity. Removing is like removing the scoreboard. Again, you don't actually need to remove the cultural hours to use fixed fees. So again, I'm not sure about that. Partnership economics make long-term bets impossible. I agree with that one. I squarely agree with that one. And even in a small firm, we feel that sometimes to a degree. To a degree, you do, as a partner in a law firm, you see your drawings as a salary, not as a profit share. So yes, no, I think I completely agree with that one.
Yeah, and I think the partnership model where, as we've experienced during our careers, and a real desire to innovate and to kind of challenge what's out there in legal services and create new products, you have to have a partnership who are willing to invest in those in that development. But if they're towards the end of their career, why should they be reducing their drawings in order to invest in something which they might not be around for? So that's often a struggle, isn't it, with the partnership model?
Yeah, I mean, we talk about having equity in the partnership, but it's not equity in the shares sense. It's not like having shares in a company. So when they leave, they hand back their equity. There's absolutely no incentive for investing. I mean, there are structures you can put in place to create that, kind of artificially, but most law firms, or virtually no law firms, have that.
So are these VC firms then, they're looking at the huge big beast legal services providers, multi-billion-pound businesses, and thinking, okay, so if we can take some humans who are really expensive out of this, and we'll be able to increase the margin of that revenue. But surely clients are going to be saying, well, if it's going to be costing you less to provide these services, then it's surely a bit of a race to the bottom. I mean, surely you've got to almost maintain the profit margin in the services that you're providing.
Yeah, absolutely. Like, I don't think there's any world in which we're going to be implementing AI to make things quicker and keeping the margin.
No.
We're not. So that, that does create revenue erosion, which can be fine. And this is one of the things that makes me slightly cautious about the size of the opportunity and why, and
Yeah.
whether VCs are fully appreciating the market dynamics. Because I think a lot of revenue going down per matter is fine if you drive more matters as a result of
Yeah.
that. And that's like economic. I think we mentioned in the last pod price elasticity, so the sensitivity of demand to price. But if you think about the types of matters which big law firms are 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 kind of like the bread and butter. They're not that price elastic. Like if you think like M&A, there's only so many deals that are done a year. The fact that your legal fees on those deals is not suddenly going to make you do more deals.
Mm-hmm.
It might make you go like deeper on diligence or what have you, but it's not going to make you do more deals. So like that's not that price elastic. So I mean that's one of the things that kind of makes me nervous about whether they're fully appreciating or making the right assumptions about the market size.
Do you think if cost of litigation, if they came down, do you think more people would litigate?
I'm on the fence on that one. I mean, on the grand scale of things that are price elastic and legal, I still think they're fairly inelastic.
Mm.
Like again, cultural differences. I know in the US they're far more litigious, but at least in the UK, like people don't want to litigate. Like they're not like, oh, the cost of the litigation is like one of the factors, but it's not the factor.
Sure. Yeah.
It's mostly I just don't want to get in a fight with someone. I don't want to spend like 2 years being dragged through the mud publicly, and people just settle. And that I don't think necessarily litigation being cheaper makes people make changes in that dynamic.
It's not going to increase capacity in the courts, is it?
No,
I mean, that they're
no,
backed up. Yeah.
yeah, and that's like a fundamental problem. Yeah.
So, further feels about what we should be cautious about the opportunity for AI first law firms. Then what else?
So what have we talked about? We've talked about margin. Okay, yeah. So assumption SaaS margins we've already kind of touched on.
Yeah.
There is an assumption in our article that you're able to like have a 60, 70, 80% margin, kind of more akin to the SaaS products they would have invested in traditionally. Again, I'm not convinced. I think maybe long term that might be possible, but yeah, automation in legal is tricky. Like it's not
Mm.
straightforward. The models that we currently have are not good for legal subject matter. They're good at understanding language, but not necessarily like then translating that language into, you know, actions or conclusions or whatever like a lawyer would. So I think for the short term, like AI native legal services are still going to be quite human like,
Yeah.
which means your margins are not going to be SaaS margins. And then I think the complexity of automation more generally, like I kind of feel like the VCs are seeing like the legal market as a whole and going, well, but if you have an AI native law firm that can cover like full service law firm, then yeah, that's like a huge thing. It's like that is so much to automate. Like
Yeah.
we have chosen a tiny, tiny use case in a tiny, tiny area of law. And okay, we're bootstrapped, but like it's hard. Like
So
it's
hard.
really
Yeah.
hard. It's hard to build and it's hard to sell. Um,
Well,
you
it's
know,
hard to sell because it's those conversations where we know there is a problem and we've got very willing, receptive, prospective clients who want a solution. But it's that gap still of even just getting them aligned with and making a real kind of small shift in mindset that we need to use Tilda is often quite a difficult process, isn't it?
yeah, and I think there's like you can only, and I think I saw a LinkedIn article about this today or yesterday. Like you can only move as fast as people are willing to move. And people assume it's private practice lawyers that are being slow. It's not. It's not just the private practice lawyers. Like clients don't want loads of change really quickly. And
Yeah.
yeah, so I mean, like I think the thing that you're talking about there is what the selection of the issues you care about on our in our
Yeah,
playbooks, right?
exactly.
Yeah,
Tilda works with in-house legal teams who often don't have a playbook. And so we're just saying from our list of risks, tick the ones that you care about. And that's
yeah.
really hard for them just to think, well,
But
okay, am I just
what
going to.
about the risks that I don't tick? Exactly. Yeah,
Exactly.
and
Yeah.
that's a problem that's pervasive across any use of AI. Like they don't LLMs at the moment don't have that intrinsic legal knowledge, so you have to give it to it. So there is it's not like it has to be a finite review by its nature. You've not got like the LLMs aren't good enough to do like a helicopter sit back and have I missed something review. Like you have to tell them what you care about. Otherwise,
Yeah.
it'll be really
Yeah.
inconsistent and not very helpful. Um,
Yeah.
so I mean, that's just yeah. I mean, we see that. I mean, what you'd say probably 1 in 10 people we show it to gets it instantly is like, yeah, that's fine. I like that. Um,
Yeah.
9 out of 10, you kind of have to take them on a bit of a journey. I mean, they get there eventually, but that's so. Yeah, I think you can only move as quickly as clients want to move. And again, I think VCs are possibly underestimating or overestimating even how quickly clients want to move. I think it's no coincidence like Crosby, who've had $5.6 million investment, similar space to us, kind of commercial contracts in the US. There's no coincidence they are focused on fast growth companies, I don't think. Because fast growth companies, other fast growth companies in the Silicon Valley will move quickly because you're dealing with the founders and whatnot.
Yeah.
They will buy that tomorrow. But
Yeah.
corporate counsel, in-house counsel, they're more sophisticated buyers. They understand the drawbacks, and they're not going to just flick a switch overnight and get on board with it. Some will, not all of them.
Yeah. Legal services to consumers. Do you think that might be a space though where there could be some real opportunity?
Yeah,
Yeah.
yes and
Yeah.
no. So in a session on the fence answer, but again, it comes back to price elasticity. So like, I just think as me as an individual, like I've got a fairly complicated life. I'm a partner in a law firm. Like my finances aren't straightforward. I don't use a lawyer for anything.
No.
Like the only thing that
No.
I'll actually use lawyer for are things I have to use lawyer for, like a will, and even that you don't really have to use lawyer for,
Yeah.
and conveyancing.
Conveyancing. Yeah.
Yeah. Um, so again, like, okay, and if I got divorced, Ricky, we're not getting divorced. Um, my wife, Ricky, we're not getting divorced. But like, you're not going to suddenly get divorced more because it's cheaper to get
No.
divorced. So
And
those
actually,
things
we've
are
seen in
like,
those. Yeah.
life events drive those things. Like, there's only so many life events that happen.
And in conveyancing and wills and matrimonial to an extent, we've seen incredible process-driven advancements in those areas already, haven't we? I mean, they're all streamlined, fixed fees. Those services are out there. It'd be interesting to see how.
Yeah, I'm using one right at the moment. So we're moving house at the moment. We're using It's something called Juno, and it's brilliant. It's productized, it's all online. Honestly, it's brilliant. It's the best conveyancing I've known. So yeah, I mean that already exists. And yeah, I guess again, there's cultural differences, and this could drive a lot of it. Like the US is a lot more litigious. You go 1 mile down a highway in the US, and you'll see like 20 billboards for personal injury lawyers. I mean, personal injury is obviously a thing here, but it's just not. We don't have that same culture. So I guess that is one area where consumer stuff could be more elastic.
Mm.
Like, oh, well, I may as well have a go at suing someone. But again, I'm not convinced. Like, okay, maybe that's not like the risk of doing that in the UK now is pretty low. Like we don't have hourly rates generally. Well, we're not paying hourly rates for personal injury cases. It's all on conditional fee arrangements. So again, if I trip over and genuinely have a claim, there's nothing stopping me doing it. Like I'm not taking on any risk by doing it, or very little risk. So again, I'm not convinced of the price elasticity there. Yeah, I think we've talked a lot about like the downside of it. But I mean, there is huge opportunity. I mean, we're doing it. We're an
Well,
AI
exactly.
first
Let's
law
hope.
firm. But I think the thing is like I am worried that VCs are overestimating the market size,
Yeah.
underestimating how much effort it is to build and sell, and you're just going to be writing massive checks that yeah, you can find it so hard to ever achieve the valuation that's needed to like make that check worth it. Um, but I mean, all that said, there is a huge opportunity for AI native law firms. I don't, again, I'm on the fence about. I don't think VC is the way to fund it at the moment.
Mm. Mm.
My mind may be changed, but I don't see it. Like, and I just don't think the article's great. Love it. The back end of the article, which we maybe spend the last few minutes talking about, is great. The front end of the article, I just don't necessarily agree that law firms can't change. I think they can. I think it's hard, but I think they can. And I also don't believe that it has to be AI native or traditional. Like it can be both.
Yeah.
It can be both today, and it can be both in 10 years' time. There's plenty of stuff where you still need both. So yeah, I just don't think it's a black or white yin yang thing.
Yeah. And I think that's it, isn't it? There is an incredible opportunity for AI first legal services, but it may not be a unicorn achieving those multiples in that time frame, and so may not be best placed with VC. But
Yeah.
so give us some info about the end of the article then, which I think is kind of where
Yeah,
we
so I'm
felt
just
pretty
I'm just
right.
reading through it now, reminding myself what I read, and was like, yes, I completely agree with this. Handle 10 times more matters per lawyer. Yes, we're doing that. Great, that's a good thing. Transparent pricing, real-time updates, guaranteed outcomes. Yep, good thing. Um, da, 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 da. The very last bit, I think, is the really interesting bit, and we are this to an extent. Where they talk about the AI things in the market at the moment being one, stuff that you're selling to a law firm, so like Harvey, Lagora, that kind of thing. Two, AI native law firms. Three, and again, I don't think I've seen anyone talk about this yet, and it really excited me because this basically describes partially what our model is the hybrid service data platform brackets the sleeper opportunity. And the idea of this is effectively exactly what where we see the opportunity in what we're doing. The data we generate on accuracy and whatnot, as we're providing our service, is a valuable thing in its own right.
Mm.
So like, so da, 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 da. Compounding moats was the bit. This is the bit that I completely agreed with. So why this model is interesting: compounding moats, more clients equals better data equals better service equals more clients, and that's just a continuously repeating thing. And I also, unless you're generating that data, we're never going to have a fully insured AI legal service, exclusively AI.
Yeah.
So the kind of groundwork that we're laying and that data moat we're creating is the thing that enables, I'm not saying autonomous legal is anywhere close, but in 5-10 years time, if we're going to have it and it's insured and regulated, you're going to need that data.
Yeah.
So yeah, that bit of the article, I was like, yeah, that describes us. That's cool. Yeah, he does talk a little bit about the secondary value of the data set and like actually selling the insights from that data as a, potentially your primary revenue stream. I'm not sure I agree with
Right.
that. I think you get yourself into all sorts of sticky client confidentiality issues and whatnot. And yes, you can anonymize, but yeah, I'm not sure about that. We certainly wouldn't be selling our data insights off the back of it anytime, and full stop, I don't think. We'll use it to make our service better. We'll use it potentially to ensure a completely AI-driven service potentially in the future, but we're not going to be selling our data. That's for sure. Yeah, so I think the back end of the article, the opportunity stuff, I think is real. I just don't think it's a black or white thing. I think both can exist, and both can be the right option in different fact patterns and what have you.
Yeah, well, I think the most exciting thing is that these conversations are happening, and we've been approached by a few VC firms, and I think just to kind of noodle these issues and talk through these opportunities and barriers with them and other people in the market has been an incredible experience, and
Yeah, it's
feels
just
like we're only
completely
just at the
mind-blowing
beginning.
as well. Like even if 9 months ago you'd said you'd be approached by a professional services firm would be approached by a VC like that really wanted to write a check, you just never ever, you'd be like, yeah, lol. um, it's bizarre. So yeah, I mean, I think it's positive. I think it's like a good sign of where the market's going. I just don't think it has to be black and white. And yeah, it's food for thought. There's definitely something in what we're doing, and I think that's the thing for me. It's like the validation that Silicon Valley is willing to start writing checks in the space. I think that's cool.
What a perfect place to end on. Chris, thank you so much. This has been episode 3 of Too Legal Didn't Read. We'll see you again soon. Thanks for joining us.
Cheers. Bye.